Welcome to Security Token Stories, brought to you by Security Token Academy, the leading educational platform dedicated to covering and facilitating the security token industry. I'm Derek Schloss, Director of Strategy at Security Token Academy. Coming up on today's podcast, we have Bryan Myint from Republic and Republic Crypto. Republic is one of the first platforms to offer a full-stack fundraising solution in the crypto asset space. Republic has helped over 70 companies raise and distribute securities using Reg is one of the leading educators and platforms on regulated token airdrops, and is backed by companies like AngelList, Binance, and Passport Capital. Without further ado, let's jump in with Bryan. Bryan, great to have you on Security Token Stories. Let's start with a quick history of Republic and Republic Crypto, how you got involved, and what your team is working on today.
Yeah, so I joined as the first hire on the crypto team in late 2017, early 2018. Started off as a contractor, then moved my way to full-time. So I was a contractor in 2017 and I became full-time in 2018. And I think before that, Republic has been around for about 3.5 years. So 2016, I would say, is around the Republic started. And the first, few years of Republic's existence, they're mainly focused on, what's called equity crowdfunding or early stage startup investing. But the main difference here is that this investing was open to non-accredited investors. So like everyday people can become angel investors in startups. So, and this was interesting because this kind of opportunity was typically reserved for what's called accredited investors, or, venture capitalists or hedge funds and things like that. So, when I started, they've been doing that for a while, and then, crypto was happening at this time, 2017, right? And they're like, ICOs are kind of like crowdfunding. You're kind of like minting this token that represents that, and then you can pay this company and a bunch of people. It doesn't matter where you are, literally. Like, doesn't matter where you are, you can contribute capital to this company, and this company is essentially crowdfunded by many people. And essentially, ICOs kind of prove that crowdfunding can be like a really strong force, right? Like those companies in 2016, 2017 raised so much money, ridiculous amounts of money. And we were like, okay, well, what if we kind of reeled this in a little bit and put a compliant spin on it, right? Like, the biggest thing back then was like, yo, this is the Wild West. Like, are we sure this is legal? I don't know. I don't care. And then, Republic has this like longstanding history of, helping out with the Jobs Act, working under Reg CF. We are SEC registered and FINRA licensed. So we wanted to put this like kind of compliant spin on crowdfunding. And I think at the time it was like not super sexy, right? But today it actually kind of is, because like now it's kind of being proven that the way towards adoption, at least in my eyes, and I think a lot of other people might agree, is that we got to do it through the right channels and the right way. And that's kind of what Republic has stood for ever since inception. So kind of like having this compliant securities law framework to investing in cryptocurrency, investing in blockchain technology, and investing in startups is like the direction that the company is going in.
So it sounds like the through line between Republic and Republic Crypto is this idea of democratization of access and compliant fundraising, with the difference being that on one side it's normal crowdfunding, and on the other side it's crowdfunding these blockchain-based projects or networks. So both Republic and Republic Crypto are drawing from the same framework, but are focused on slightly different means to achieve that end result. Is that how you would draw the line between the two?
Yep. Yeah, it's the same like regulatory framework that we've been using. That's a really good point you brought up there, because like we're kind of thinking like, okay, Republic Crypto and Republic, the main difference here is that, yeah, we're focused on blockchain and crypto projects, but as the space is maturing, a lot of blockchain and crypto projects are actually raising on equity instead of on tokens. and there's also the security token movement going on as well, where the security tokens can potentially represent equity as well. So we're actually seeing like a blending of Republic and Republic crypto in terms of like just the way that we analyze deals, the way that we onboard the deals, the way we educate the founders. It used to be a lot more different. Like, okay, tell me about your token economics. Tell me about your token utility. Grilling them a little bit harder on blockchain. But now it is a little bit more just like almost like a standard VC style diligence. We're checking, for security tokens, like, okay, like if the security token represents a piece of equity or represents, some sort of dividend or rev share. These are all somewhat traditional concepts, just kind of applied towards blockchain, where you get like enhanced liquidity and all these other benefits of security tokens. So the line between Republic and Republic crypto is getting more and more blurred, and which is super interesting, right? Because to me, that's like, okay, well, that just when crypto, if and when, I would like to say when crypto becomes like mainstream adopted, it's going to be the same thing. People are going to start, investing on these like liquid contracts, maybe investing through security tokens. They might not know that they're doing in security tokens because the user experience might abstract all those concepts away. But, the whole back end is going to be blockchain, digital assets based.
Sure.
So, that line is slowly getting more and more blurry, if you ask me.
That's really interesting. Can you tell me about some of the changes you're seeing in the typical profile of Republic's issuers and investors, and how things might look a little bit different over the next few years?
Yeah, I would say, the biggest change that we're seeing is that we have projects that are building on blockchain tech, but not necessarily issuing like a token through an ICO. Where they're like, okay, yeah, we're using blockchain, we're using Hyperledger or something, and we're using it to track these transactions, but we're really just selling equity in the company. And to us, that's like, okay, so you're like a tech company instead of just using like a normal database using blockchain. So we'll still evaluate you like a normal tech company. That's becoming more and more of a trend. As far as investors, we still kind of see. That's an interesting question, because if you ask me, I don't know if investors are completely ready, or at least retail investors are completely ready to invest in blockchain and crypto projects just yet. They might be looking for a little bit more validation from other projects before getting involved, because we do have a very strong and active user base of retail investors. So retail investors are non-accredited investors, kind of like your everyday investor. Mm-hmm. And they're backing projects that are like all the time. Like we have projects like food startups, we have other tech startups. We had a drone startup earlier that was really cool. And those are concepts that people get. But blockchain things, it's still a little bit iffy. Like we still have, I think, like crypto investors on Republic that invest in these crypto projects. And then we have this whole other like general everyday retail investor that invests in like non-crypto projects.
Yeah. That makes sense.
I think that it's that line again, like it is kind of blurring a little bit, but I still see that segmentation.
That's helpful. Before we get into airdrops, would you say, given the full breadth of projects you're seeing launch today on Republic, that because the focus is typically on non-accredited investors, that most of these are exempt offerings through something like a Reg CF, or are they structured as something else? And have these trends been changing on the platform, especially as more blockchain-based projects come to market?
Yeah, that's a great question. I think that our bread and butter will always be Reg CF. Because I think that's where like our mission aligns the most with, and that's where we get like the mainstream, kind of the mindset shift where everyday people can be like, oh, I can be an angel investor. I can invest in these things. So the majority of our offerings are under Reg CF, but I'm not sure if we actually got to talk about this earlier, but we have greatly expanded our suite of offerings at Republic. We recently acquired a broker-dealer. It's going to open new doors for us, and that we're we're realizing, Reg CF is great and it's really good for access. But some companies, they just want to raise more money, right? Like Reg CF has a cap of $1.07 million that you can raise once per year.
Right.
That might be good for seed stage funding. It's also good for maybe like a round to just get your community in, and that's about it. But if a company's trying to raise like 5 million or 10 million, they can't do that through Reg CF. So we'd like to be able to supplement these Reg CF, or we just want to be able to supplement our suite of fundraising options, broker dealer, which will help us with Reg D, Reg S, Reg A plus type offerings as well. And through that, we're able to kind of do syndicates for projects as well, very much like AngelList. And we actually do it through AngelList, that allows us to kind of go into our own network. So like within Republic, all of our employees have their own networks. And if there's a really good deal that we're working with and they want to leverage our syndication services, then we will kind of open up that deal to our network and syndicate around for them.
That's great. And congratulations on putting those pieces together. Just listening to you talk, there's a lot of opportunity for Republic to grow in new directions over the next few years. You guys are moving quick.
Yeah, I hope so. And then like the goal is to kind of like build this kind of all like a one-stop shop, kind of like if you're a founder, you're like, okay, I have this really cool project. I have a cool team. I just need money to build my vision. Then they'll come to us and be like, okay, this is what I want to do. And then we can kind of pick and choose from our different options and be like, okay, based on what you want, we think a Reg CF combined with a Reg D would be great. We recommend you do the Reg CF first and then the Reg D, or you do the Reg D first and then the Reg CF, based on what they want, and just like kind of customize a fundraising plan for them. And it doesn't matter if it's crypto or non-crypto. I mean, it'd be great if it's crypto. It's also great if it's not. So, we are able to support all types of technology.
Awesome. Well, let's jump into airdrops. Republic has been putting stuff together on this front for a while now, and I've had a chance to review the airdrop report off your platform and read more about your new airdrop initiative called Note. From a high level, can you walk me through what exactly an airdrop is and why they might be so helpful, and how you think they might be able to help incentivize some of the new blockchain projects coming through Republic?
Mm-hmm. Yeah. Airdrops are super interesting in my opinion. They're like a blockchain native way to promote your project, which is really interesting because I think, ICOs and tokens and cryptocurrencies, they are able to solve what's called like the cold start problem, where you have this network, but you're like, okay, how do I get them excited about my project? What can I give them, But, before crypto, there wasn't many things you could give them. But now that you have crypto, you're like, okay, well, I have this token that in theory would have some utility on the platform or some monetary value or something like that people would want. And airdrops give you the ability to send these tokens to your community of users. And what that does is that you now are seeding your network with like this asset that they in theory would want to use on your platform. For airdrops to be successful, the token has to be designed well for the airdrop. Like you can design the most awesome airdrop in the world, but if your token isn't like that cool or isn't something that people want, then it's just going to sit with them and they're not going to want to do anything. So for us, like the type of clients and type of airdrops we work with, it really depends on how strong of a token economy, token incentive design that they have, because it's a combination of both an airdrop strategy and the token design and how well that token is tied into the platform, the protocol, or the project, right? So say you have this like really cool token and it incentivizes people to like either trade on your platform or vote on your platform or stake on your platform or interact with other people by, trading these tokens internally. Then like all you have to do is now make sure that that token is in the hands of as many people as possible. And once that happens, the token will take care of itself. So that's the power of airdrops, where you can just kind of like literally give away these things to kind of get people to start using your platform or using your project.
Yeah.
I think there's like kind of a strategy where people would blindly airdrop tokens to like anybody where they could just claim it for certain reasons. And there's also another type of airdrop where it's like more targeted. You're like, okay, I want to airdrop to my existing user base, or I want to airdrop to only developers or something like that.
Yeah, this was one of my favorite parts of that report you guys put together. You drew a line between these just general network drops where essentially the issuer could basically indiscriminately drop a token to someone based on some queried factor, like they have a certain amount of ETH in their wallet. But then you also say that there's these smart precision drops, I think is what you called it, where the issuer can drop a token to people who can carry out an action, right? So like developers who can actually develop code that can further the network progression. And so is that, maybe you can talk a little bit more about this, because I thought that was super interesting, and how you guys came to that conclusion, and whether or not these kind of smart precision drops have been just stickier in kind of helping build these networks, and some of the lessons learned just from these general drops versus these more specific targeted drops.
Yeah, I would say I think there's a use case for both. The general network drops are really good for getting the word about your project out there. I think they maybe have been played out a little bit too much, so they may have lost their novelty. But I remember back in the day, maybe you were alluding to the Omise Go. If you have Ether, then you get a bunch of these OMG tokens. And I was like, oh, what is this? And it made a huge deal back in the day, right? Like everyone was like, this is super cool. And I thought, that's super novel, right? Like being able to scrape the blockchain, the entire Ethereum blockchain, super novel, right? Being able to just like, but that is almost like a targeted airdrop, right? It's like you're targeting Ether. It's like, there's still a lot of people that got that, but it's somewhat targeted because like, okay, maybe people that like Ether or that are fans of Ethereum will probably like OMG. So that is a really interesting like way of thinking. For us, we typically will do airdrops that are even more targeted than that. And my favorite one is like the developer airdrop or like the existing community airdrop, where you don't really promote it very much, but people that have already been in your community, you're like, okay, hey, thanks for being in my community. I'm just going to give you guys this present. That's like a really meaningful way to like say thanks to your community. And because they're already in your community, it means that they're somewhat interested in your project, so they would use it. The developer airdrop is something where and I think this is going to be pretty big in the coming year, where a lot of these protocols, so there's a lot of these like layer 1, layer 2 blockchain protocols that are supposedly supposed to compete with Ethereum that are launching. But what are they going to have to do? They're going to have to get developers to develop on their platform, because ETH has all the developers right now, right? So how are they going to do that? They have to incentivize them somehow. You can incentivize them with grants. You can incentivize them with hackathons. You can also incentivize them by dropping tokens into their wallets and being like, hey, if you authenticate through GitHub or something like that, then you are now entitled for a drop of our layer 1 tokens. So being able to target developers is going to be the name of the game if you want to become a viable network protocol.
Yeah.
So that's why I think that the developer airdrop can be pretty significant.
Yeah.
And like by kind of airdropping to a certain subset of users, it kind of makes these users also feel special, right? It's kind of like a marketing tool. You're by kind of like being selective about who you airdrop to, it makes that specific audience a little bit more inclined to interact with you, because they're like, oh, wow, you're targeting me? That's great. So I think that the targeted airdrop is going to be a lot more interesting. I know that Stellar and Coinbase have been developing these programs for more advanced airdrops where like you have to, answer questions, right? I think Coinbase's latest airdrop is like, learn about this protocol, and then after you've proven that you've learned about it, then you get the airdrop. Which is also another way of like making sure that you're targeting the right people, or that the people are properly educated. So still a very novel concept. I think airdrops are still in its infancy in terms of like use cases, but it is a super interesting one because you're basically minting kind of this money out of thin air and then giving it away to people and hoping that it'll cause them to use your platform.
The world has endless possibilities with magic internet money.
Tokens are crazy, right? Like, it now, instead of like giving away parts of your company, you can give away this money that you've created. Like you just minted it with like a few lines of code, but in theory, this money can have value based on your network's value. So it's just a complete, like, how do you even value that? I don't know. I know people are working on it. But yeah, just like being able to give away these things that you've created is a completely new idea. And marketing with it it's like being able to give away, I don't know, if you were at an airline, you were giving away rewards points or something like that. It's kind of like that. And then now that you have reward points for this airline, people want to fly on that airline. So similar concept, right? But it's more than just like the monetary value of the points. It's like being able to have a say in the network, being able to like earn more, maybe through staking, interest, all that stuff. And then you get into the world securities laws, but there's a lot, like you just said, it's very unexplored, very new. And I don't think current like regulations like provide a ton of clarity on how all of it works.
Totally. So I do want to ask a question about some of the regulations that may provide some clarity around airdrops today. This is something that may have been refined and illuminated recently with the SEC's investment contract framework, and may not. But maybe you can tell me how you guys at Republic think about airdrops in light of our current securities laws, and whether or not, I guess, maybe just kind of very high level, how you guys think about these things interacting, or whether or not they fit squarely within one of the exemptions, or whether they don't, and maybe you can kind of just tell me about your thinking around this.
Yeah, totally. So, I guess I'd like to preface this by saying that I'm not a lawyer, and then, but I did ask my legal team before coming on to here, and essentially the answer is that nothing has really changed from the SEC's investment contract framework. However, we've already had a pretty securities law friendly stance to begin with. So it's not a surprise to us that the SEC's framework doesn't affect us, because we were already, interpreting the law to be compliant with the SEC. And to go a little bit deeper into that, there's this whole debate around tokens being securities or non-securities, and airdrops are essentially a giveaway of tokens. And if you want to take the conservative stance that tokens are securities, airdrops are giving away securities. And you cannot give away securities unless you do it through the proper way. And the proper way, in our eyes, is through like a funding portal, like Republic, right? We have what's called a funding portal license, which is the license that allows us to run these campaigns that are open to everyday people, the retail investors, non-accredited investors, and also accredited investors. So an airdrop on Republic is essentially a modified version of our Reg CF traditional fundraising campaign. And that's what it is at its core. Like, our airdrops are done through Reg CF. It's that we've done a little bit more legal engineering to make it so that you don't have to pay money for them, right? Yeah. So it's still an airdrop where you just get these things free of cost. So that's the stance that we have. And that's how we have been able to kind of have these like compliant airdrops where these tokens, even if they're not securities, we still treat them as if they were, to be on the safe side.
Okay, got it. Okay, maybe we can kind of transition to Republic's new initiative called Republic Note, or the Note. From a high level, what's going on with this new campaign, and what's the mission and goal for the Note moving forward?
Yeah, totally. So we do call it the note, but at its very core, the note is a digital asset. That's on Republic. First and foremost, for now, the note is only we're giving it away. There's no price attached to it. It's not traded on any exchanges. It's not liquid, and it's only earned and used on Republic's website. So it's closed within our ecosystem for now, and we're doing that very strategically as we roll it out. And our whole goal right now is to get as many people to have it as possible. And you just go on our website, sign up, and claim your free notes. It's been quite a journey, and it's taken a lot of like legal engineering, product engineering, strategy to kind of be able to roll this thing out. And we really hope to make this a reality because in its end state, like it will be like a kind of democratized investing, right? Like anybody can hold this. Like literally right now, anybody can get this. And if we're able to execute on this vision, everybody's going to be able to benefit and get returns when startups do well, which is kind of stuff that's only been reserved for top 1 or 2% of people in the United States. So that is the goal. And as with security tokens, like there are pathways to liquidity that are quicker than traditional VC, 10-year horizons. So those are also kind of like the things we kept in mind, because like building this for the everyday person, and everyday people don't have the luxury of waiting 5 to 10 years for an exit, to see returns on their investment. So
are there chains or platforms that you're looking to partner with, Ethereum-based tokens that could then be put into a wallet and traded over a DEX or traded on an exchange? I guess, have you started thinking about secondary markets at all and what that could look like?
Yeah, so we've put some thought into it. Our note token, there are plans to build it on Stellar right now. However, is not 100% set in stone. We are evaluating other options right now. Binance's chain is one option that we're looking at. But traditionally we've been kind of eyeing Stellar's blockchain as the home for the note.
I guess from your perspective, why Stellar versus a different chain?
Yeah, so Stellar has native fiat to crypto on-ramps. Stellar is also their blockchain is, I would say, is less complex than Ethereum, meaning it doesn't have all of the the Turing complete functionality. It doesn't have smart contracts in the way that Ethereum does, which kind of gives it a little bit more security. And on top of that, Stellar has a lot of the compliance aspects that we want kind of built in natively to its platform. So like out of the box, it actually just is a better fit for us than Ethereum. Also, the faster transaction speeds are pretty attractive to us as well. And they have their decentralized exchange, which, if you mint a token on Stellar, is basically ready for the Stellar DEX right there, which is helpful too.
We can finally close it out, and you can tell me a little bit about what you think will happen in this space, 5 to 10 years from now, and specifically around blockchain leveraged equity fundraising and STOs, and maybe the evolution of Reg CF and Reg A Plus, and what you guys at Republic are keeping an eye on by way of regs and exemptions, and maybe where you're hoping kind of the space evolves.
Yeah, this is a super interesting question. Let me talk about the regs first.
Okay.
So Reg CF is really cool. We really like it, but it's just not. It's too limiting to be the only exemption that a company uses. What I mean by that is, you can only raise $1.07 million. There's accredited investors probably don't really care too much about it. They would just go through a Reg D And then sometimes companies are like, is it worth it to go through the work of opening a CF when I could just do the same thing and do a Reg D? So we hope to see some changes in the regulations around Reg CF, where hopefully the investment limit gets raised to $5, maybe even $10 million. And the limitations for accredited investors are like, it somehow it becomes more appealing for accredited investors to participate through Reg CF as well. Our team has been kind of, I wouldn't say lobbying, but just kind of monitoring this situation,
right?
In making Reg CF a little bit more appetizing for companies to raise on. I think that Reg A Plus is also a super interesting regulation that hasn't really received much love in crypto. And I hope maybe the SEC will provide a little bit more opportunity for companies to raise through Reg A Plus, because Reg A Plus is essentially, a way for non-accredited and accredited investors to raise, to contribute capital to a project, but with a cap of $50 million.
Right.
It's a lot more work to get it done, of course, but it can also be much more beneficial, much more valuable for a project.
Right.
So that's kind of where I see things going in terms of the regs.
Yeah.
As far as like the industry and how companies fundraise, I alluded to this a little bit earlier, but I see crypto projects and standard equity projects kind of blending in terms of like expectations. So I think in 2016 there was this expectation where crypto projects were literally raising $50 million on like an MVP or maybe even less than an MVP.
Right.
Equity projects have, they raise the normal amount, right? Like $5-10 million based on. Right. There's still like, I think, room for the two types of fundraising to level out and meet each other in the middle. But I do kind of see more and more projects just going towards a straight equity fundraising route.
What does the rest of 2019 look like for Republic and Republic Crypto?
The rest of 2019. So it definitely will focus a lot on delivering on the Republic note and delivering on the vision of the Republic note. We also want to still like increase awareness out there that Reg CF is a compliant way for projects to be able to fundraise from their community, but also on the investment side, we want people to be able to know that they can invest like angel investors in startups. So like instead of maybe going to maybe gamble on lottery tickets or sports or other ways to gamble, maybe like stocks even, you can invest in startups. Risk profiles are pretty high in both, maybe, but it'd be cool if you can vote with your money and support the next generation of startups on Republic. So I hope that, we try to get that word out there more, and I hope the Republic Note will help with that. And just kind of, I think that like this whole scene of like getting everyday people to invest is just starting, right? Like I think venture capitalism isn't even that old in general. So getting everyday people to invest is going to be like a next major push for us.
Yeah.
And we try to continue that through 2019. From the crypto side of things, we are looking forward to, this whole like tokenization movement where, people are tokenizing securities, and also continuing to build out like the rest of our fundraising products, right? So I was mentioning like we got the broker dealer, we have our syndication arm, we also have an accreditation platform where we do KYC, AML, and accreditation. So just kind of becoming this full service suite for tokenization, for fundraising, and all this stuff. So that's 2019.
That's it for this week's episode of Security Token Stories. For more Security Token content, visit us online at securitytokenacademy.com and subscribe to our newsletter, The Security Token Edge, which lands in your mailbox each weekend. You can also keep up with the latest security token news by following us on Twitter, Telegram, YouTube, Facebook, and Medium. Before we go, a big thank you to Security Token Academy's Platinum and Gold corporate members who make this podcast possible. You can learn more about Security Token Academy's corporate members at securitytokenacademy.com. I'm Derek Schloss. From all of us here at Security Token Academy, thanks for listening.
Security Token Academy does not provide investment or legal advice. We are not a registered broker-dealer or investment advisor. Opinions expressed in this podcast are the speaker's own and do not necessarily reflect the views of Security Token Academy. More information can be found on our website at securitytokenacademy.com.